Americans can rest assured that our banking system is safe.
Silicon Valley Bank has collapsed and federal regulators have taken control.
If we hadn't been driving our economy with easy money and then trying to really quickly undo that, we wouldn't be having these problems now.
We're now facing a world of many potential outcomes.
Hey there, welcome to this channel. In this video, we'll be looking at what happens to BTC during a recession, and why we should level up our BTC to prepare for a recession. But before I start, make sure to drop a like for this video and subscribe to this channel. Bitcoin has weathered many a market downturn, but never a recession. As a result, Bitcoin is probably resilient enough to weather a recession. The effects of a recession are difficult to foresee at this time. The economic climate shifted in 2021, bursting the speculative bubble that had been building up over the previous year. All risky assets were hit hard as interest rates were raised and quantitative easing was halted by central banks around the world. It's possible that Bitcoin prices may stay low until the economy improves. Since Bitcoin has never existed during a recession, predicting its fate during one is difficult. There are, however, indicators that can help us infer the degree to which it might remain stable during that time. Bitcoin was initially created by an anonymous person using the alias Satoshi Nakamoto in response to the 2008 financial crisis. Nakamoto created the blockchain and cryptocurrency we use today in response to the catastrophic meltdown of the global economic system. It was designed to function autonomously, meaning that it would never have to answer to any higher authority. The world's economies are now more intertwined than ever before. In the past, the collapse of one economy might not have had a major impact on the economies of other countries. However, in the modern world, a threat to the economy of one country can quickly spread to the economies of other countries. Bitcoin's independence makes it a riskier investment, but it also means it can keep functioning even if the macroeconomic climate shifts. Bitcoin's fixed quantity and consistent flow rate are also factors in its favor. Only 21 million Bitcoins will ever exist, and there are now less than 2 million available for mining. When the total number of coins has been mined, no more will be created. Because of this, Bitcoin can now be considered a store of value. Inflationary markets, which frequently precede economic downturns, can cause the value of currencies around the world to fall, reducing consumers' purchasing power. Bitcoin has outperformed traditional inflation hedging assets, such as gold, even through bear markets, and has thus provided a solution to the problem of declining purchasing power. Investors should be aware that the BTC price is not likely to recover during a recession until the global economy regains strength. When that happens, Bitcoin's returns might potentially outperform those of almost any other asset class. Remember also that Bitcoin's decentralized network of mining pools allows it to continue operating even when individual businesses falter or even fail during a recession. Thus, Bitcoin investors may rest certain that a slowdown in economic growth is not expected to affect the functioning of the network. Bitcoin will undoubtedly survive. In the video, I will also be sharing with you why you should invest more in BTC during a recession. Secure and globally transferable store of wealth. Bitcoin is valuable because of its rarity, its decentralized nature, and its ease of transferability. Bitcoin, like gold, is a commodity, since its value is independent of the state of the economy. Its potential gain is not the consequence of favorable industry trends, technological superiority, new ideas, strict cost control, or competent management, as is the case with a stock. Instead, its worth is unaffected by economic growth or decline. Ethereum, crypto ETH, may have greater potential for growth and more real-world applications, but Bitcoin is more resilient in a downturn. Its focus is not on developing blockchain-based smart contracts, non-fungible coins, or other real-world applications. Instead, Bitcoin was designed to act as a savings mechanism. Built to last. When compared to other fiat currencies and cryptocurrencies, Bitcoin stands out as a uniquely attractive investment amid economic downturns. It may, on the other hand, lag behind Ethereum and other tokens with greater potential in the long term. Bitcoin is still a terrific way for newcomers to the cryptocurrency market to get their feet wet with minimal risk. The whole quantity is limited, and production is slowing down. The fact that Bitcoin's algorithm hasn't been broken by time lends the currency a lot of legitimacy. Since its introduction in 2008, the Bitcoin protocol has reliably controlled supply by assuring a steady rate of Bitcoin mining and a diminishing rate of new supply added per block mined. The amount of computing power available is a measure of interest in Bitcoin. It stands to reason that it's grown. The amount of computer power involved is unimportant and does not affect supply in the same way that an increase in sawmills would affect the lumber market, or that an increasing in drilling activity would affect the supply of oil and gas. BTC is massively diversified on a global basis. When individuals talk about a recession, they usually mean one in the United States, and center their discussion on the economy, the Federal Reserve, and the full faith and credit of the United States Treasury. They may also be considering the cost of gasoline in the United States, the unemployment rate, and other economic indicators. However, a myopic focus on the United States misses the big picture of Bitcoin. Bitcoin was created to be a decentralized global money, unaffected by the actions of a central bank or other trusted authority. Buying Bitcoin is as simple for someone in New York City as it is for someone in Nigeria. Therefore, investing in Bitcoin is a gamble on the future of the international economy as a whole, not just the US. Even if the United States economy has slowed for the past several quarters, there's still plenty of global economic activity. Bitcoin could only fail in the event of a global economic catastrophe on such a scale as to drown the entire planet. It was built for it. Bitcoin was forged in the fires of the Great Depression in the United States. The mysterious creators of Bitcoin set out to fix the problems with the established monetary system by inventing digital money that would be secure and operate independently of any central authority. They achieved their goal of producing a decentralized, non-fungible value store independent of any one nation's currency. Bitcoin remains a safe haven for crypto investors. You should invest in safe haven assets before, during, and after a recession. During a downturn, investors should move their money into safe stocks, like utilities, healthcare, and consumer staples. It's safe to assume that businesses producing necessities, like food and power, will continue to turn a profit even if the economy tanks and your neighbor loses his job and businesses begin filing for bankruptcy. Consider the cryptocurrency market with this reasoning in mind. People will abandon volatile, riskier cryptocurrencies in favor of more well-known ones. And at the moment, the biggest and most reliable brand is Bitcoin. Even if people liquidate a large portion of their cryptocurrency holdings in a coordinated effort to raise funds, they're unlikely to sell all of their Bitcoin. Bitcoin is the cryptocurrency most people will hold for the foreseeable future. This is the end of this video. Make sure to drop a thumbs up and remember to subscribe to this channel.